Hello, good afternoon. You've tuned into your stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai News Studio. Look at the market, what it is doing, right? While Nifty is just around and flip-flopping between the red and the green, 24,670, 680 levels is what it's holding on to. Keeping an eye on that, as of now, again, the market has gone into the red. So let's see in the next 1 hour of trade, where are we going to be headed? That's going to be important to watch out for 1.5 hours. But 24,676 is what the Nifty is at. Nifty Bank, that also, we saw that spike up coming in when the CRR cut came in for the Nifty Bank. But then again, it started flatlining, just flip-flopping between the red and the green is the Nifty Bank also as of now. So off the day's highest point is what the Nifty Bank is trading at. Mid and small cap, that's managing to hold on to gains. That is not going anywhere. The mid and small cap run-up that we're seeing. Small cap also holding on to gains of 0.8% in trade. So yes, that's how the market setup is looking like. But this is a show where we'll be solving all your stock-related queries. And we have our experts joining in with us. We do have Shahina, Mukadam, independent market expert, as well as Vaishali, Parekh, head of technical research at Prabhudas, Lilladher, joining in with us. Very good afternoon, ladies. Thank you so much for joining in with us. It's a very special day also because it's our 25th anniversary that we're celebrating. So, Vaishali, let me start with you. Today we had the MPC meet. We saw Nifty Bank see a bit of a spike up coming in. But now we're seeing a bit of a fall again, right? It's almost a flat line. What is the Nifty Bank looking like in terms of a move that we could be seeing?
Good afternoon, first of all, to all of you, and heartiest congratulations on this important day. Yes, so Bank Nifty, we saw yesterday it did surge high, and it's very well maintaining above the previous high. So the bias still continues to be positive as far as Bank Nifty is concerned, though it's just a sideways move post the RBI announcement. But I would say that at the current scenario where we are seeing Bank Nifty, we would have a range of 53,000 levels as support, and the higher projected target comes to around 54,500 to 56,000. And having said that, even with Nifty, yesterday, well, we did see the crucial resistance levels of 24,800 being met with. So now if we see this Nifty moving above that, then I think we would be looking at 25,200. So that's how we are looking at the market currently.
Okay, that's how we are looking at the market currently. But on that note, let's get started with all the stock-related queries that we have. And the first query that we have today is on Adani Green. This one is coming in from Lakshmi Rao, who's writing to us from Telangana. She's holding 25 shares of Adani Green at a price of 2,315 rupees per share. So currently, obviously, they're making a loss on this one. Wants to know whether she should continue to hold or maybe just book out her losses. Shahina, good afternoon. Take the query first for us.
Now, before I go to answering that, best wishes, 25 years. I have been, part of this long journey along with you for most of it. And I look forward to the next 25 years and more. So my best wishes to you, CNBC, the whole team. I think you're doing a wonderful job and look forward to keep watching you and participating with you guys over the next couple of years. Yeah.
So that,
now coming to, yeah, thank you. Coming back to Adani Green, see, basically valuations are extremely expensive. Now, so any negative news, the stock will continue to take a hit. And the limited upside that we see because of the expensive valuations is likely to see the stock remain in this range, one way or the other until some news break, positive or negative, takes place. Secondly, I think, the fundraising capacity of the company is likely to be questioned, or they may have issues, because we also have Total Energies, which is an investor in the company, holds equity in not only Adani Green but in other group companies also. They have said they are going to limit their investments, at least for now. So all these things put together, I would say it is better to switch.
Okay, better to switch. That's the word coming in from China on Adani Green. But on the technicals, Vaishali, what is Adani Green looking like?
No, so I would not really be in favor of this right now because it is showing weakness. There is no clarity. So I would say that rather get into some other stocks which show better strength.
Okay, look at some other stocks that are showing better strengths. That's the word coming in from both our experts. Let's move on to the next query. Again, this is coming in from the Adani Group side that we have. It's on Adani Ports. Now, Mahesh is writing to us from Tamil Nadu. They're holding 100 shares of Adani Ports at a price of 1,360 rupees per share. Currently, stock is trading at 1,262 rupees per share. So, what should they be doing with this one? Whether they should continue to hold this, book out losses, look to average? Shahina, what are the fundamentals looking like for Adani Ports?
Well, here again, the fundamentals remain strong. Of course, it is the largest player in the port segment. The ports industry itself in the next 25 years is expected to go up by 4 times. And Adani management has actually said that in the next 5 years, they are looking to double their volumes, revenues. So I think to that extent, we are likely to see good performance going forward. They already are reporting very good performance if we see the last couple of quarters. Having said that, again, I think the major problem over here is that it is not cheap. But and any negative news that comes about for the group, like, the stock may take a hit, it may consolidate for some time till there's a resolution on the US issues that have risen in the recent past. So having said that, I'm very interested in the port segment as a whole to be an investor. Look at the other company, JSW. I would say that it's a switch. You could look at JSW Infra, which is very tiny compared to Adani Ports, but at the same time, valuations are more or less similar. So if you want to be safe, if you want to play safe, then better and be in the sector, then you can switch. Otherwise, you can hold with a stop loss, and it is a risky investment.
Okay, that's a word on Adani Ports. Keep an eye on that one. But on the technicals, what is it looking like, Vaishali? Should the viewer continue to hold this or maybe just book out profits?
So, well, I would look at there could be another probability that, yes, see, overall, the long-term trend has been very intact. When I'm looking at the weekly chart also, 1,000, which we saw in the recent past, was a very prominent support. So, of course, this stock is quite prone to a lot of vulnerability. But I would say that, well, if you don't mind taking the risk, keep accumulating with 1,000 as the support level, because we have also seen tremendous returns coming from these stocks. So if 1,000 is the stop loss that he is ready to maintain and buy at lower levels to average his cost, I think it's worth a wait to look for higher targets going towards 1,500, 1,600.
Okay, keep an eye out on those levels over there for Adani Ports. Let's move on to the next query, and this one is coming in from the hotel side. We have on Indian hotels. So the viewer is Jaishil Ketani, who's writing to us from Mumbai, holding 115 shares of Indian hotels at a price of 128 rupees per share. Wants to know the future prospects of his investment in Indian hotels. And in the last 6 months, when you're looking at the stock move also, it's seen a good up move, 42% uptick. Vaishali, Indian hotels on the technicals, what is it looking like?
So on the technicals, overall, all hotel industry stocks are doing very well. And of course, Indian Hotel being the front runner, we have seen tremendous good run coming in. But stock is also getting into the overbought zone. So whether I'm talking about the daily chart or the weekly chart, so I would say no harm booking partial profit or continue holding with a trailing stop loss.
Okay, continue holding with the trailing stop loss is what you're seeing. But on the fundamentals, Shahina, hotel space, there is so much that is happening here. I don't think hotels are ever going to go out of style, right? And I don't know whether the stock will or no, because you have those concerts, they can charge any prices that time. You have the holiday season that is there. So fundamentally, what is Indian hotels looking like?
I totally agree. Actually, while the stock is expensive, it has always been expensive in the last couple of years. I would say that going forward, not only asset backed, they're also looking to increase the revenues with management fees, adding fees based on taking over hotels for management. So to that extent, I think, it's a good growth story. You can hold it in your core portfolio and keep it for the long term.
Okay, hold it in the core portfolio, can keep it for the long term. That's the word coming in from Shahina on Indian hotels. Keep an eye out on that one. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll still be taking all your stock-related queries. Welcome back to Your Stocks on CNBC-TV18. We still have our experts with us, Shahina as well as Vaishali, who are solving all your stock-related queries. Let's move on to the next query. This one is on Bajaj Finance. We have Shrikant, who's writing to us from Kerala, holding 13 shares of Bajaj Finance at a price of 7,616 rupees per share, making some bit of a loss right now, but wants to know whether you should continue to hold this or look to sell. Shahina, what's your word on Bajaj Finance?
I would say it's better to switch. Switch to a bank like maybe ICICI Bank, HDFC Bank. Now, the issue over here is that if you see the last 3 years, Bajaj Finance stock price has not moved any which way, anywhere. And valuations which were very high earlier have now become more reasonable. If you look at current year, it's about 5 times price to book, which is not too expensive for, NBFC like Bajaj Finance. 1 year forward, it will be 3.5 times price to book. So to that extent, yes, it is starting to look attractive. Having said that, I think in the near term, it is likely to continue to consolidate around current levels. They actually recently have discontinued their co-branding of card business. That should affect a bit in terms of business. Their overall, they are trying to restructure their business in a way to improve the asset quality, especially the B2C business. So all these things put together, I think we are likely to see the performance of the company remaining subdued and the stock price also for a couple of quarters. So I would believe you can relook at it, but a couple of quarters down the line.
Okay, relook at it, but a couple of quarters down the line. And right now, Shahina is saying maybe you can look to switch. But on the technicals, Vaishali, is that a similar trend that you're saying, maybe book out right now and then a couple of quarters later, someone could look at it?
I totally agree. Actually, the stock has hardly given any returns. So right now, it is at a resistance of 200-day moving average. So if he's already holding it in a loss, I would say wait a while, because if the stock moves above 7,000, 7,200, maybe he can get a target of 7,500. And then I would say suggest a switch, because this is not really giving us a runaway rally in this stock. So of course, at least one can wait for a bounce.
Okay, that's the word coming in from Bajaj Finance. Maybe right now could be a bit subdued, can look at it later on point of time, can look to sell right now. Next one is on Berger Paints. Now we have Rakesh Jain, who's writing to us from Chennai, holding 40 shares of Berger Paints, and this is at a price of 618 rupees per share. Wants to know whether he should book his losses or continue to stay invested in Berger Paints. Vaishali, what's your word on the technicals for Berger Paints?
So technically, all the paint stocks are not doing well. So right now, what I'm seeing, there is no sign of reversal also. So I would say avoid paint stocks right now. Can make a switch.
Okay, avoid paint stocks right now. So one could look to book out from this one. Shahina, what are the fundamentals looking like for the paint story? Would you also advise the viewer to maybe book out and invest somewhere else? And if yes, then where?
Yeah, I agree. The paint story is not looking too good. It's not been looking good for quite some time, actually. Even if you look at the last couple of quarters also, not been good. The margins are contracting. We've seen this across the paint, sector, across companies. And competition is, hotting up. So to that extent, I think, and valuations have always been expensive for most of the companies in the paint segment. So I would suggest switch from Berger Paints and also, from the sector itself.
Okay, switch from Berger Paints and also from the sector itself. Okay, that's the word coming in there. Let's move on to the next query. This one is on IDFC First Bank. We have Shashank, who's writing to us from Hyderabad, holding 1,000 shares at a price of 59 rupees per share. Wants to know whether to hold or exit at the current levels, making some bit of a profit right now because the stock is trading at 66 rupees per share. On the technicals, so what is it looking like, Vaishali, IDFC First Bank, given that the stock has seen a bit of a fall in the last 14 days?
So it's showing some signs of revival, but still there is no confirmation. Unless and until the stock moves above 70, 72, I think the stock is just going to be sideways, because we have had several opportunities at these levels, but the momentum or the up move fizzles out. So I would say just wait till 70, 72, and then if there is a sustainability above that, then it would be a confirmation for a further strength going towards 78 and so on. So I would say wait and watch.
Okay, wait and watch. I meant 14% decline in the last 6 months is what I was indicating at. But yeah, Shahina, on the fundamentals, what is it that we're watching out for in terms of IDFC First Bank?
Yeah, I will agree. It's a wait and watch. See, what has happened is if you see the second quarter, the profits were substantially lower, both on YOY and QOQ basis. And the main reason was very big jump in provisions. Now, the merger with the IDFC into IDFC Bank has happened in October. That is post the last quarter numbers. So what I believe is that it is possible that, they cleaned up, the whole balance sheet to an extent which resulted in that poor set of numbers. So as of now, the merger has happened, but we still have to see what are the implications of the merger in terms of the impact on the asset quality, impact on their NIMs. So all these things are variable factors which actually will be clearer in the December quarter numbers or full year numbers. So what I would suggest is that keep a stop loss, maybe since it's close to his holding price, keep a stop loss and wait and watch.
Okay, wait and watch. That's a word coming in for IDFC First Bank. But that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us, as always, and solving all our viewers' stock-related queries. And viewers, do not forget that you can always email us your queries, and we will address them with our experts on a Monday, Wednesday, and Friday. But with that, it's a wrap on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Have a good weekend, but don't go anywhere because closing bell is still there to take the action forward.